Okay, hello everyone. This is Bo Eckstein with Emerge Lending Group. Today we're going to quickly talk about consumer bridge loans, and this is specifically for agents, realtors, brokers, so you can learn how you can maximize your sales process and get business that you might have lost. So let's get into this. So a consumer bridge loan basically allows for a client to buy another property that they want to move into, but they have not yet sold their current residence. In the past, what would happen is that when they go to B of A or Wells Fargo to apply for a purchase money loan on the property they're looking to buy, they get declined because the banks take both payments from their existing house and the new house, and that blows up and their debt ratios are too high and they're not able to qualify. So that's where the consumer bridge loan comes into play, because debt ratios do not matter with this program. This was specifically designed for this situation. So as an agent, this is critical for you to know how you can navigate these waters and get some more sales. The seller and your buyer, same person, right? They're going to basically use the equity in their existing house and use that equity to buy the new house. The process is simple. First, they identify a property they're interested in, and they call you or they let you know, hey, we're going to write an offer. We're just notifying our loan agent at Bank of America or Wells Fargo, and then all of a sudden you can't get a pre-approval letter because their debt ratios are too high and they're not able to buy it. And then their idea gets shut down and you are all excited to write the offer, but unfortunately they can't qualify. But then you remember about this video and this information I'm sharing with you. And now you can start talking to your clients that you would have normally not thought it was possible, and you can maybe bring some deals back that were previously you were working on, but they kind of fell out because their loan officer at the time told them they can't do it until they sell their current house. So with this equity program, we can make things happen like that. So I'm going to go right to an example, and then we'll go back to these slides. I think it's better this way to show you the visuals. House number one is the house they live in now. It's worth $2 million. They have a ton of equity in it because they only owe $500,000. They went to an open house. They found this beautiful house, and they're ready to downsize. And they can buy this house for $1.2 million, this new house. Traditionally, they would have had to write a contingent offer, or they would have had to sell their house first and then written an offer after that. And that all causes, severe inconveniences, right? And most people don't like to do that. So in this example, what would happen is you remember about this video, you contact me, I quickly do a quick underwrite of the deal, of the purchase and the loan, and I let you know if it's doable or not, and then I can issue a pre-approval letter. So if you want to look at the numbers here, they're buying a property for $1.2 million. They owe $500,000 on their existing house, right? So that's $1.7 million. Now the values of the property are their current house number one, it's worth $2 million, and house two is worth $1.2 million. So you got $3.2 million worth of value divided into what's owed, or what will be owed, which is $1.7 million. So the combined loan to value between that is 53%. So essentially we could do this with no money out of pocket, except they do have to come out of pocket just for closing costs. So we can go up to a CLTV of 65% on this program. And so the way this looks is that we write one mortgage, one loan, and it's got a deed of trust which is secured in second position against house number one, and a deed of trust in first position against house number two. Once the deal closes, they move into house number two, gives them time to fix up house number one. You go ahead and list house number one, sell it for top dollar, They take the proceeds and pay off the $1.2 million loan. At that time, they can put another traditional conventional loan on if they want and pull some cash out. Or we can do it simultaneously. This kind of solves the problem, right? See how this can work wonders for you? So let's go back up here. Some of the other advantages. They can write a non-contingent offer. And sometimes in the past, I'm sure you've written an offer which was contingent and it's gotten turned down because they want to accept an offer that can close in 30 days. We can close our loans in 14 days or less. They can write an offer non-contingent on appraisal and loan, which is great on their offer, right? It's going to look a lot better. So I mean, in a nutshell, that's pretty much the program. I mean, it's pretty simple. It's cut and dry. It's an equity-based program. So if you're interested in learning more, we're talking about its particular scenario, please reach out to me. My contact information is here, Bo Eckstein, bo@emergelending.com, and you can call me on my cell phone or text me, 925-852-8261. Thanks for listening. And if you know anybody that you could refer me to, another agent in your office, I'd love to help you with any of these solutions. I also have a lot of other products that can be creative. So if there's anything outside the box, you can always call me and I can let you know what we can do. Have a great day and go sell some houses. Bye-bye.